Oh yeah, the first earnings video in a hot minute. Can't lie to you. It's good to be back talking about some earnings, and who else to bring it back than a little bit of Micron. Definitely a always interesting stock. We love to see it. It's been performing pretty well in the last little while. As a result of the earnings, they reported yesterday after hours. They were up. They were up around 3% to start the day. Ended up down 2% with a little bit of movement after hours. Nothing crazy. But we'll take a look at this and see why it turned down. Obviously, there was a good initial reaction. Then through the day today, we saw a little bit of a dip down. So we'll see if we can find any reasoning for that to turn a little bit sour. Yeah, I'm interested in that for sure. Obviously, a stock near the 52-week high. No doubt about it. If you're looking, obviously, personally, I'd look in the last year. Very up and down, as the stock does, but still overall up 35%. So it's up pretty decently in the last year. So let's take a look at these earnings. So, from the looks of it, obviously not bad at all. A non-GAAP EPS number of 78 cents beats by 9 cents, and a GAAP EPS number of 71 cents beats by 16 cents. Overall, that's a really good profit line by them. A beat on both the non-GAAP and GAAP aspects is pretty exciting to see. And then even from a revenue perspective, of $5.77 billion is up 12.3% year over year. It's a beat by $110 million, which really is nice to see there. So you see overall a beat in terms of the top and bottom line is always good to see. And it's definitely a recipe for a stock to continue going up when you see beats on both ends. An operating cash flow of 1.97 versus 2.01 of a year ago. Billions we're talking about. I gotta be honest. If you're looking at that in terms of operating cash flow, I think that's pretty impressive. Because we're still, frankly, in pandemic times, and a lot of companies still seeing earnings taking a hit year over year, and to see them not fall that much is not bad at all. I mean, that's pretty well leveled out from the year prior, so that's pretty exciting to see. Quarter two sales are expected to be around $5.8 billion with an adjusted EPS of 75 cents. So a similar quarter to what they just posted, so we'll see how that looks. I'm not quite sure what that looks like, but we'll see. So, nice quarterly beat and strong guidance. You love to see that. The fourth quarter, you saw a dip, but obviously double-digit growth here. Gross margin rose to 30.9 from 27.3 a year ago. Good to see gross margin growth. Operating income rose 64%, which is nice. And attributable net income also rose 64% to $897 million. Really good stuff. From Sanjay Mehrotra, you see these words here. All right. President and CEO says, we are excited about the strengthening DRAM industry fundamentals. For the first time in our history, Micron is simultaneously leading on DRAM and NAND technologies, and we are in an excellent position to benefit from accelerating digital transformation of the global economy fueled by AI, 5G, cloud, and intelligent edge. Yeah, that is one thing, obviously. These words from the CEO, no matter what, any earnings, they're going to be meant as an effort to sell the stock to people. That's the entire point of public companies. They want to sell the stock to people. So, again, this is actually relatively accurate, though. You talk about how the chip industry, how important it is when we're talking about AI, 5G, cloud, and intelligent edge. I mean, this is this is integral, an integral part of the future economy. I mean, the future economy will entirely be led by these aspects. So, chip companies that are providing products for this is, well, it's quite important. It's always good to be on the edge of, the edge of tomorrow. Maybe you might want to say that. Has anyone seen that movie? Never seen it, but, it's a movie. If it was bad, I apologize, and it's not a good analogy. But for now, I'm going to say you want to be on the edge of tomorrow, baby. What's going to be big over the next few years. Not what's big right now. What's big over the next few years. You better plan ahead and get yourself straight, okay? Nice stuff. So, for the current quarter, obviously we saw guidance of 5.6 to 6 billion, above the estimates of 5.5 billion, which is nice. And gross margin of 30 to 32%. And EPS of 68 cents to 82 cents, which is above the consensus of 64 cents. So it is strong guidance. So it's a beat on all aspects, obviously. Top line, bottom line, guidance, all beats. So I think you know why the stock started up. From these numbers, obviously, I can't tell why this stock might have trended down. We'll look at the press release itself and look for a little bit more in terms of detail, see if we can find anything exciting. I don't necessarily think I get why that's the issue, but who knows. GAAP net income of 803 billion. I meant 803 million. That's a good take-home bucket right there. It is really revenue of 5.77 billion and a net income line of 830 million. That's a really good turnaround on cash there from your revenue compared to your take-home net income. It's pretty nice. It's good to see profitability like that, especially with everything going on. So, really good stuff. And again, as you see, if we're looking at revenue, overall increased year over year from 5.7 billion, which was only a 5.1 billion number in the same quarter last year. So that is overall good improvement on that aspect. It's good to see. I don't know. I like to see it, and I hope you do too. It's pretty good stuff. Net income, even net income, which is really nice to see, at 803 million, is way larger than the 491 million they put up last year in this quarter. So I like to see that at all. Their EPS even grew year over year in the middle of the pandemic, which I love to see. In terms of business outlook, we already saw the estimations there. So pretty nice to see. That's most of what they're showing here. I do want to look at the balance sheet for sure. The thing about Micron, I'm not happy with them, is they're giving me a 3 months comparison on the balance sheet. Not as exciting as I might want to see, but maybe they're trying to show something here. Total current assets sitting at 16.5 billion compared to 17.9 3 months ago. So a little bit of a decrease there in terms of assets. And total assets in general at 53.69 versus 53.67. So overall, if you're looking at everything included, there's a little bit of a growth. And some of that in property, plant, and equipment has increased. So just a few small increases, in a few places. Total assets grew. And again, I say by a little bit, but again, $20 million is... I'll take $20 million. That's not really a little bit to me, but again, to this company, $20 million in the grand scheme of thing over 3 months. Not incredible amount of cashish. Liabilities, total current liabilities sitting at 5.6 versus 6.6 3 months ago. So you did see a $1 billion decrease in terms of total current liabilities, which I love to see. You're talking about a company that saw total current assets sink, obviously, but they also used those, my guess is, to shrink some of this debt line. Total liabilities in general came in at 13.7 compared to 14.6. So total assets saw a little bit of growth, and total liabilities actually decreased by right around 800 million total. So really closer to 900 million, I should say. It's 900 million, nearly $1 billion. So in terms of stockholder equity, that's sitting at 39.9 billion versus 38.9 of 3 months ago even. So that's even in a month's time. You see some pretty darn good improvement. And this is one thing I really like about this company. It's a balance sheet it's hard to beat this kind of balance sheet here. You're talking about total assets of $53 billion. You had a stockholder equity of $40 billion. That is an incredible balance sheet, and this company brings in profit very nicely, and they limit expenses quite significantly, even this year. They've done a great job through everything going on with increase in terms of every sort of expense under the book. Micron's done a great job. So that's something I really like to look at, because you talk about the stock and is it a stock worth buying right now? Honestly, if I'm being frankly honest, the stock trades at a PE ratio under 29 right now after today. It's sitting a little bit under 29, I'm pretty sure, or right at 29. It trades pretty cheap. A market cap of right around $86 billion. It's not bad for a company bringing in around $25 billion in a year. That's some pretty overall, even though it's close to its 52-week high, it's a relatively cheap valuation for this company. It's a company that I think gets relatively unfairly maligned, and it's pretty cyclical. I mean, you saw not much movement here between 2018 and 2020, but overall has seen some pretty good growth. And if you look max, I mean, there's some up and downs here, but I think this stock's on to new horizons right now. I think it's on to bigger and better things, and this stock will be over $100 by the end of this year. So I think there's a lot of good stuff. The momentum's there for this company. I think this stock, frankly, is a stock worth buying right now, even at these levels. So if you agree or disagree, feel free to let me know and your reasonings for it. So overall, hope you enjoyed this one and you have a great day. It's going to be good. It's going to be huge.